Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 1st, and today we're doing it after the market report, as I'm still dealing with some computer issues on my computer I'd normally do these on. So it might take a little time until we get that repaired. So, anyways, to touch base on, we have a couple economic news releases, a couple important ones, and today we'll start off with the weekly jobless claims. Last week we had about 345,000 people applying for unemployment. The forecast was to be about the same number this week, and it actually came in much lower at 326. So a good number this week on the weekly jobless claims. So fewer people obviously applying for unemployment. And then we also got the market PMI for the month of July. So June we had a little bit of expansion. So anything above 50 is considered expansion. Anything below is contraction. So we had a little bit of growth showing in June, and so July came up further, so that expanded that growth to 53.7. So much better reading than previous month. Now ISM manufacturing for the month of July, we had almost a break even for the month of June. The forecast was to expand upon that a little bit of 50, bring it up to about 52, and it jumped up to 55.4. So pretty huge spread there. Very good numbers there for the manufacturing. Now we also have the construction spending for the month of June, and we had a 1.3% growth in spending in month of May. And for June, it was supposed to still show some expansion at 0.4%, and it actually contracted to negative 0.6%. So good overall numbers. The construction spending is pretty mild, low impact on there, but the ISM, the market PMI, and the weekly jobless claims are all going to be high impact. So this is what's going to drive the market today, as we'll see on the stock market, which was up today. And matter of fact, the S&P closed at an all-time high at 1700 today, above 1700. So good news for them. So as a result, we're going to take a look at the bond market, and money is being pulled out of the bond market and pulled into there. So horrible day in terms of the bond market. We basically lost 1 point. So in the morning, or rate last night, for example, if it was at 4%, that no point loan is now going to cost you 1 point. So literally, we went from a Fannie Mae of 100.91 dropped down all the way to 99.1. So that's literally 1 point right there in pricing towards the interest rates. So that could equate to easily about 3/8 of a point or 3/8 of a percent increase in the interest rate due to that. And then yesterday, as you saw, we were down quite a bit. We even had that huge opening gap, but after the announcement of the Fed where they're going to continue the kind of easing on there, but they even reduced their forecast for the economy from modest to mild. So I mean, they have a less optimistic view of the economy, so they kind of they kind of worsened it slightly, because they see things are just barely creeping along and stuff. And then they also voiced their concerns of the higher interest rates that spiked up in May and June. So those are also a concern. This could also, as we can see, this is raising the interest rates. But tomorrow is going to be a big day. The job numbers going to be reported, and the previous month in June we had 195,000 new jobs. The forecast for this coming month will be 180,000. So if it comes in a lot shyer than 180,000, look for a rally in the bond market. If it comes near 180,000 or even higher, stock market will probably be rallying, and then the bond market we could suffer, which means that when the bond market's going down, the interest rates are rising. All right. So sorry, but we got not too good news on the bond in the stock and the interest rates today. So interest rates went up a bit today. So I appreciate you guys watching. Stay tuned. Tomorrow will be the big day. Let's watch tomorrow. I'll see you guys tomorrow, and thanks again for watching.